I get this consistent question all the time. When is a good time? When is the perfect time to purchase a property in this marketplace? And which is a fair question because obviously no one wants to catch a falling knife in the Toronto real estate market. But one thing people are underestimating is how quick this market can actually turn around. A 10 to 15% bump up in sales, that can make a major difference in how this market can feel. And to be honest, I think we're on our way there. Let me show you exactly what I'm talking about. So the bottom, when it comes to home sales, happened in March. This is a chart of the change in home sales off March 2025 levels, which is on a seasonally adjusted basis. And the data here shows it very clear. Look at this surge in sales in Ontario since the spring lows. Unless we get hit with a traumatic recession in 2026, which is unlikely, sales will grind higher from here. You have to think, back in March, we were dealing with a collapse in consumer confidence. There was a Canadian federal election going on. There was the start of the US and Canada trade tension when we didn't even have a prime minister. There was tariff talks becoming in play. Trump was being very loud. And there was just so much noise going on in the headlines that it was hard to ignore, and consumer confidence collapsed. So that was the reason why sales pretty much froze in the real estate market. When headlines are loud, people do not like to make decisions in the marketplace. And real estate's a funny thing. As prices decrease, which they have been, and this is pretty much the 9th or 10th month in a row that they've decreased. If prices continue to decrease, more people will jump in the market and it will reverse the pendulum on the marketplace. It's just a matter of time. Now I'm going to talk affordability, and no one is pretending affordability is good by any means, but the important part is the direction on where affordability is going. So this chart is the monthly mortgage payment required to purchase a typical home, and it's based on today's rates and prices. And again, this chart represents data for Canada as a whole, but it's still a great reflection on what's happening in Ontario. So as you see here, we're well below the peak. Peak happened in 2023. That was based on those rates and prices. So prices haven't really fallen yet in 2023, but rates were also at 7%. So things were very expensive then. And obviously rates drifted lower and prices drifted lower, which brought affordability down. And as you see, according to this chart, we're actually at 2022 levels when it comes to affordability. And when affordability was at this level in 2022, home sales were 40% higher than they are today. So that tells you a couple of things. One, how hard sales can actually swing back. And two, affordability is not the main thing holding the average consumer back right now. Confidence is. And confidence is psychological, and that can surge quicker than what a lot of people think. So yeah, when you look at consumer confidence, and especially real estate confidence, it's soft, and there's no question about that. But it is getting better though. Like if you compare it to the time when we were at 7% mortgage rates and supply was at all-time highs, it's a different marketplace, and consumers are sort of making decisions again, but it is still historically speaking low. But as people realize the economy's not crashing or the market's not collapsing and the worst is behind us, more people will jump in the marketplace. I think there's a lot of pent-up demand where people are sitting on the sidelines waiting for things to get better. I think with a couple more rate cuts and a trade deal, or at least some clarity on trade with the US, that will push people off the sidelines. And to be honest, that's completely on the table for 2026. But let's take a look at this chart real quick. It's home sales per 1,000 people across Canada, adjusted for population. And I'm going to show you how pent-up demand is for sure building. Remember, this video is Ontario specific, but this chart represents Canadian home sales. I know I couldn't find a chart like this for Ontario, but this is still an excellent proxy for how our local market behaves. And this is one of the cleanest measures of true organic demand. And here's what jumps out immediately. So if you see this red dotted horizontal line right here, this represents the long-term average of Canadian home sales. And the home sales metric, this is highly mean reverting. So over long periods of time, home sales always drift back towards its average and has a natural run rate. Every time we spend years above average, we later spend years below average, and that's vice versa. Between 2018 and 2020, it's a perfect example. We had lower than average home sales for 3 years, pent-up demand built right here, and then boom, 2020 to 2022 happened and pulled forward the demand built in the years prior. A massive spike of sales as buyers rushed in after being locked down for months. We had FOMO buying, pandemic moves, low rates, all of that. But then when you fast forward till today, we now spent about 3 years way below average, and this is one of the weakest demand periods in modern Canadian housing history. The only other times we were this low in sales was literally when the country was shut down during COVID and the global financial crisis. So in other words, the people who planned to move in these past 3 years, they didn't. Investors who planned to buy, they didn't. Families who needed more space, they stayed put. Renters who wanted to become owners, they're waiting. So it's inevitable. Home sales will eventually return to baseline. And baseline from here means a 20 to 25 bump up in sales on an annual basis. And that will make the market look a whole lot different than what it is right now. Sprinkle in a couple of rate cuts, possibly a trade deal with the US, and definitely the people that were waiting for the past 3 years to buy, they will jump off the sidelines and be busy in this marketplace.